Hey everyone, thanks for listening in. Today I have a very special guest joining me, though those of you who deal with our firm or come to our conferences, you're pretty familiar with Noelle already. Joining me is my law partner, Noelle Geiger. Noelle handles all types of federal and state audits, appeals for income tax, corporate tax, partnership and estate tax. Noelle, aside from being one of my, aside from being one of our law partners, is also our New York State expert, and she and I are effectively our New York State office, right? But Noelle has extensive experience in city and state residency audits, which examine domicile, statutory residency, allocation of income in situations involving potential dual residency. She advises clients on matters involving domicile planning and other common controversy issues like innocent spouse, payroll tax problems, you name it. And Noelle and I have been sort of following all of the changes that have been occurring due to the coronavirus and the government's response to it. So Noelle, first of all, thank you for doing this with me this morning.
Thank you, Eric.
And
I want nothing more than to wake up and do this webinar, and I'm just happy that I don't have to suit up.
Yeah, thank you. Yes. On the podcast, there's no live pictures. And so you and I had sort of emailed back and forth about what we thought, what the government's doing that we wanted to talk about. And then like late yesterday, we got some sort of breaking news. So can you kind of give us what's hot off the presses right now?
Yes. So what's hot off the press is very exciting, and it's important for us to stay abreast of it. So in summary, some of this might be redundant, but we all know that the president declared a disaster, and this basically deputized the United States Treasury and the IRS pursuant to Section 7508 to grant some relief. So IRS Notice 2020-17, the relief for taxpayers affected by the ongoing coronavirus pandemic, was literally issued yesterday. So Eric and I sliced and diced it, and we'd like to, get out what you all need to know to prepare your clients and your practices to best represent them. So basically, there has been an extension of time to pay income tax payments. So the due date for payments is no longer April 15th. It's been put out 90 days until July 15th automatically with no interest and penalties.
Right. And so, it's a great way to just get into this. Because what I'm getting a lot of is, people saw the extension. And so now we're getting bombarded with, well, does it cover all the taxes? Does it cover payroll tax? What about my installments? So we're going to get into all of that. But you've already started in on this. Can you talk about what is extended and what is not extended?
So this is very important. Individual income tax payments are extended, but you still need to file an extension for the tax return or the return itself. So the filing is not extended, it's the payments. So this definitely could produce a challenge for people who are stuck at home, whose accountants are working remotely. They still have to file an extension electronically or something.
By April 15th.
By April 15th, yes. And the payments will be extended. So the payments are extended until July 15th, and individuals can defer up to $1 million in tax payments, and the C Corps can defer up to $10 million in tax payments. It's also good to know that 2020 estimated tax payments are included, and we're getting relief for that as well. But they did not mention anything about payroll tax.
So the payroll taxes, first quarter 2020, not extended.
No.
Tax returns themselves, not extended. What is extended is the payments that you would make on your 2019 1040 and your first quarter, at least for now, first quarter 2020. Which brings up an interesting, and I don't think, and by the way, there's no answer to this, I don't think. Although maybe that first quarter. So April 15th, don't need to make my first quarter payment. Great. Is it all due second quarter? Or does that get spread over the next 3 quarters evenly? I don't know. I don't know what they're going to do about the estimate. The estimated tax, I believe it's silent on that, the estimated tax penalty. I mean, to play it safe, what I would advise people to do is, if you can, make a double second quarter payment. But if you were to spread it evenly over second, third, fourth quarter, so effectively you're doing a third, I would think that would be okay, but there's no guidance on that. All right, the bill is silent on the
Yes,
matter. So,
exactly. I agree with you, Eric.
yeah. So if you're listening and you're like, all right, well, okay, great. First quarter's, I'm just trying to think through it. First, if I'm sitting there and I'm the CPA and the client says, okay, great, I don't have to make my first quarter. Do I just spread it evenly or not? What I would tell them is, look, the IRS didn't say. If you want to play it safe, and you can, I would pay a double second quarter effectively, first and second quarter, because that, you know, I'm pretty certain you know you're going to be fine. If you were to spread it evenly over the next 3 quarters, I think there's a good argument why it would be fine, but you know, we don't know. And this is always the problem whenever they rush something out, is I'm not even sure they even thought about it. All right.
There's
I'm
a
sure
lot of things that they didn't even have time to think about. They were so concerned with pushing out this relief quickly.
Yeah, well, of course it happens in the middle. This whole thing starts in the middle of tax season. So, I mean, the timing couldn't have been worse for at least for taxpayers, as far as the tax piece of their world. The timing of this couldn't have been worse. So, okay, so we get it, right? The 1040s payments, they're extended. If you're not going to get it filed by April 15th, make sure you get an extension filed. Cool. What about enforcement? Right, there's been a lot of concern about enforcement, the IRS levying people, filing new notices of lien. There's no one working at the IRS at the local offices, so getting a hold of people is a problem. Was there any update on that?
Yeah, so we were told in our ABA webinar yesterday that there is almost a moratorium on the enforcement. The collection division is being told to effectively stand down, and managerial approval will be needed for any levies. So the IRS is really cognizant of the fact that this pandemic's affecting everyone, and the enforcement and tax seizures and new notices on liens and levies, you know, more likely than not, they're not going to be filed right now unless a manager approves it and wants it. And as far as the audits go, the field audits, the desk audits, and any new audits, it's not likely that they are going to be pursuing information document requests on the new audits or initiating invitations for additional audits. The existing audits are going to be left at the discretion of the taxpayers and the auditors. So we were told yesterday, and Eric, I think that it surprised me that if the taxpayer agreed to have an auditor conduct an examination as of yesterday at the site of the taxpayer, that they were continuing to conduct these in-person examinations in the field, despite the fact that many of us are stuck at home.
Well, yeah, I mean, so yesterday, what Noelle's talking about, if you're listening, yesterday, the American Bar Tax Section Administrative Practice Committee had a call. And, you know, so we heard from the IRS executives, and this is what they were telling us. Also, Noelle, Dave Parducci, who works with us, is a former revenue officer at Green and Sklar's. Dave had gotten this the moment it came out. So 2 days ago, I remember Dave sent that email to us saying all the field enforcement is being told to stand down as far as issuing new levies. So I think that's a good move. Well, what is interesting is what they told us is the audits that are already going on. So it's not like a field auditor will call and say, hey, do you want to do the audit or not? But for those that were existing, like already in the middle, the government, which I'm surprised too, given the pandemic and when the president issued the basically, you know, consider this a natural disaster. I'm surprised they did this. They left it to the discretion of the auditors and the taxpayers if they wanted to continue the audit or not. And, you know, on the one hand, I get it. You want to just finish things that are in the middle, and who knows how long this is going to go on. But I found that surprising too, that they didn't say, look, for the health and safety of all employees, yeah, audits are all these audits are put on hold right now.
I mean, I would say
yeah.
that the taxpayers' reps or the taxpayers themselves say no. You don't have to agree or feel intimidated by an auditor that asks you to come over and continue with the audit.
Right. No. Well, first of all, my honest advice is and people fall out all over the place. And I'm not a doctor. I'm married to one, but I'm not a doctor. And I believe I'm taking this. I'm listening to the CDC, and if they're saying social distancing, don't travel, don't go anywhere unnecessary. My advice would be, I know everyone wants to, just finish things up. Don't do that, right? Bad idea. I'd rather be overcautious and people be overcautious than undercautious. So aside from that, right? What about the folks? Because I've gotten a bunch of these emails from clients actually, right? I'm in an installment agreement, right? My monthly payments are those also deferred 90 days. I have an offer in compromise pending. You do a lump sum offer. You've got those 5 months to pay the balance, or maybe you're in a deferred offer and you're making monthly payments. Are all of those deferred 90 days?
The answer is no, Eric. The installment agreement payments, the offer payments, they're not deferred. They're still due, which means if you can't make them and you don't make them, you'll be in default. And it was hoped with the relief that was just passed with the notice yesterday that this additional 90 days would free up for people if you were having a problem paying those payments. Maybe if you didn't have to pay your taxes by April 15th, you would be able to reserve that money and stay current with your installment agreement or your offer payments. Whether that's true or not, it's a case-by-case basis. So if you find that your client is going...
And here's the interesting thing. So if you're listening, so Noelle and I were having this conversation yesterday. I'm going to give an example. So I got a call last Friday by a client that runs a catering business and was saying that they were very concerned because all of their weddings and bar mitzvahs and baby namings and everything have all been called off. All of the events on Monday. They laid off all 200 employees and are starting to shutter some of their operations. Well, we had submitted a 433 already 2 months ago to the IRS about a payment plan. Is this, you and I were discussing this.
Yes.
What about the people that are like, I'm in an agreement, I've now been laid off, or my business is basically going under. I run a bar and there's no one coming in the bar anymore.
So for a majority of these people,
what do these folks do?
Those 433As that were inked and submitted and prepared within the months prior to this January or February, they're moot. Financial circumstances have changed. And what you should do immediately is call the IRS, revise and prepare another Form 433A or B with the new circumstances given COVID-19, and plan on renegotiating whatever agreement it is based upon the new and valid current financial situation given this virus.
Exactly. I mean, and so when it comes to collection, what a lot of people don't understand is IRS collection, and most of the states, although I try to avoid GAB because they're so varied and different. I think what you have to understand is that is a snapshot of where you are now. And so the point of that is the following. You are allowed to modify an agreement. The fact that you requested an installment agreement, even if they accepted it, that's not set in stone. So you can always call the government or even just send a letter if you're not going to get held up on the phone. All right. Now, if you're an accountant, hopefully you're using call ENQ, right? You get through to the government like under 3 minutes, usually under 7 minutes, certainly. But if you don't want to do that, you can always send a letter saying we submitted a 433 on, I'll make this up, December 24th. right? Requesting an installment agreement of $1,500 a month. My client has since lost his job. My client has now had to lay off employees because of the coronavirus. My client right now is earning no money. We are submitting a revised 433, please see attached, and are requesting currently not collectible status. Perfectly valid. We do this, I would say, all the time. Even without coronavirus, I have clients that call and say, I can't, Noelle, I can't make up my payments. Dave, I'm falling behind. We modify these all the time. The thing that my advice is to be proactive about it, because all the government employee knows is what they see on the computer. And if you just stop paying, all they see is the default. What I'd rather they see is a note there saying, contacted by taxpayer, has lost job, submitting new financial. Contacted by taxpayer, income has decreased, submitting new financial. You're still going to have that default notice come out when the payment doesn't come in, because it's all automated, right? So the notice will still come out. But we've at least informed them, and I just like the note in the administrative file. So if I have to have a fight with a revenue officer later, they can't say, hey, your client had an opportunity, Eric, and they just stopped paying. What I can say is, we contacted you immediately. My client did the right thing when there was a change. And I have found in the past, let's say you owe more than $250,000, that will usually go to the field. So it'll be 3, 6, however many months, it'll get to a revenue officer where we can show that. You know what I hear from the RO? The best case is, look, we couldn't pay $2,500 a month. We can only pay $300 a month. We submitted a new financial. We called the IRS, and my client's been making the $300 a month payments. They're usually cool. Eric, yep, I see all that. Let me review this financial. I'll get back to you. There's never a fight. Otherwise, what we get is your client stopped. We didn't hear from them. They defaulted. And now I have to sit there and trying to explain everything. Now, in the end, we can usually get there, but there's a lot less fighting and adjunct if the client at least has contacted them in advance and try to get out ahead of it, right? And let the government know what is going on. But even beyond this, just as a lesson, when your client is in an agreement, right? Offers are a bit different, all right? But for an installment agreement, you can always contact the government and submit new information to modify, all right? Usually we're only doing this when we want to go down. I don't have too many clients modify that want to go up, all right? But you can always call to modify. And so, yeah, well, it's great advice. Your comment about if you've submitted a financial in the last few months, that's not set in stone. Because of the changing situation, you are allowed to go ahead and submit and modify that, which, by the way, is a great segue into our next topic, which is, given the current economic, and by the way, Noelle and I and Jeff and Lisa, at Green and Squires, we've been having these conversations this last week. So I'm interested, though, Noelle, in your take. Given what is going on, I mean, hopefully not too many people get sick. Hopefully, God willing, not too many people die from this. It is serious, but if people do the right thing, we can hopefully, minimize the impact and the spread of it. But the economic impact. I mean, we're seeing articles now, the bars that are just sitting empty, the restaurants that now can only do takeout or are closing. My catering line, who's let everybody go. What are you projecting as far as the economic impact? And
yes.
Those of us who do tax rep, what are you thinking?
So, Eric, I've been following very closely the National Restaurant Association, and they are lobbying in a tremendous way for some sort of relief and legislation. The restaurant industry is predicting a loss of $225 billion in restaurant sales over the next 3 months, and 5 to 7 million people losing their job in the restaurant industry. So they are working right now feverishly to lobby President Trump to do something about this. And that industry, the hospitality industry, obviously the airline industry, facing devastating consequences, and that's also going to roll out over a period of time to a lot of other industries. And they're also calling for community development block grants, because right now it seems that the virus is rolling out from the West and the East Coast, and it's predicting that it'll go towards the Midwest after us. So it's the timing of it, and they're trying to predict the clusters of where the economic relief might be needed more towards the cities on the West and the East Coast. So now more than ever, the big four economic analysis are putting out wonderful LinkedIn posts and reports predicting the economic short-term and long-term, even into 2021, about what they predict is going to happen here on an industry-by-industry basis.
And so to translate that, for those of us listening to this, if you're not doing representation now, you should be, right? Because think about what's going to happen. Everyone, my catering client, I'm going to be honest with you, was shockingly clear-headed about this. What happens, Noelle, and you I think you'll agree with me. The client is like, I'm going to hang on. This will go away. I listened to the president, right? 2 weeks, this will be gone. Remember when he first said that? He threw that out no offense. It was a stupid off-the-cuff comment by the president. Give it 2 weeks, this will be gone. So people tend to hang on. What are they doing? They're keeping their staff. They're running up payroll taxes, but they don't have money coming in. Any sales they come in, they're keeping the sales tax money, right? Because they're trying to hang on. Ultimately, if they fold, or even if they don't fold, now the government shows up, whether it's the IRS or the Department of Revenue. I mean, you and I just saw there was a headline. New York State is predicting a $7 billion hit because of the coronavirus to its coffers. The state has to make that money up, all right? What we're hearing, at least
exactly
on the IRS side, is, I mean, from SBSE Commissioner Eric Hilton and Darren Dio and the rest, enforcement, Chuck Reddick was already, enforcement is back with a capital E. I know we're in this lull, and the field force was told to stand down. That is going to end at some point, and the pressure is going to be on to go and collect. And so
the pressure is going to be on in a major way, and representing the taxpayers with the sales tax and the trust fund taxes, because let's face it, Eric, those are personal.
Yep.
They can flow through the responsible officers, and the owners of the restaurants or other industries that might have to lean back and not pay and remit payroll and sales taxes, they're going to need us.
Well, they're going to need us, but if you have clients right now who are in that position, here's what I would do. Yeah, unfortunately, you got to let people go. You got to stop the bleeding of the payroll tax. If the sales tax, whatever sales come in, please put that money aside, all right? The smarter thing to do, look, a business is an asset, no different than any other asset. Stock, a bond. Now, I understand, and I've said this before on the podcast, people have like this weird affinity for these entities that they create, like it's their baby or something, right? But if you were to talk to any financial advisor, it's just another asset on your balance sheet. Except, as Noelle was just saying, this asset has the ability to not only be destroyed, but destroy all your other assets because of the trust fund taxes, the sales tax, payroll, and withholding tax. And so the smartest thing to do now is if this asset is going bad, to end it before it spirals, and exponentially now you have a personal liability. So there's that. But right now, all right, I think there's going to be a lot of opportunity to try to help taxpayers who are going to really get hurt by this. Whether it's they're going to stop filing, right? Because they can't pay the self-employed, they can't pay the tax by April. They always go on extension to October. I don't know that this is going away that quickly. All right. And so you're going to have people that come October can't pay. They often will stop filing. Payroll taxes, whether the government allows for the 90-day deferment or not, there are going to be businesses that are going to be deferring because they just don't have it. All right? The state is usually more aggressive than the feds. New York, Connecticut, it doesn't matter. Florida, California, Illinois, take your pick. they are all going to have to get aggressive. They're going to have to try to make up this money, because think about what's going to happen. The money's going to slow down coming in, right? As far as the hit to the fist, who is going to be going looking for unemployment or welfare? There are going to be lots of people who are unfortunately going to get wiped out by this. All right, the state, I think.
And I would also presume too, Eric, in the restaurant industry, we all know there are a lot of workers that don't have taxpayer ID numbers or social security numbers. And, you know, unfortunately, they're not protected. And for the restaurants that hired these people and paid them in cash, and now they're laid off.
Yep.
Many of them might run to the Department of Labor for unemployment if they can, or and try to obtain relief, and that could initiate problems that we've seen before with worker classification. And I'm saying,
and by the way,
in the past, when you thought you were paying someone half on the books, half off the books, and you didn't think you had to be worried about it, there might be new problems now, because people are going to get more and more desperate when they don't have a job and there's no money coming in. The crunch is happening, and the ripple effects of this are going to be something that, you know, we could deal with and put people on payment plans, assess the situation. It needs to be documented. If one of your clients gets the virus or is caring for someone with the virus, you know, just document what's going on and when, so that when you open the lines of communication, as Eric mentioned earlier with the IRS, you have your facts, and that you'll be able to document the facts if needed with paper.
One other thing Noelle, you and I didn't talk about, but it just struck me. If you have clients who are in that situation, meaning you know they've been paying, well, first of all, if you know they've been paying people off the books, you shouldn't have them as clients. You shouldn't be signing off on a return you know is inaccurate. But that aside, if you have people come to you, let's say, who had this issue, seriously consider voluntary disclosure. You can do it for worker classification. You can do it for income tax, payroll tax. If the client gets into the government first, okay, whoever gets in first wins. If they can get in first before the government starts an investigation or audit of them, they can get in, avoid a criminal referral, and even for the most part, often avoid criminal civil fraud penalties. So
that's a great point, Eric.
Yeah, now if you have someone who's in this and now begins to realize, I got to let these people go, they're going to go try to claim unemployment, I'm going to have this massive problem. The best advice, if you're an accountant, CPA, EA, get them to a tax lawyer and quickly get a domestic voluntary disclosure submitted to the government. By the way, it's going to take 9 months to a year and a half before you even hear from the government. Plenty of time to prepare amended returns, have them sort out what they're going to do. If they can't pay, they just get into a payment plan. They could be uncollectible, who knows, all right? Also, the states have their own voluntary disclosure program. So look at the state programs as well. But there's an opportunity for people that begin to realize that this is all going to come home to roost, right? I mean, Noelle and I are doing this now. We got a criminal case where Noelle's trying to get this person into New York before New York finds out about it. And can we head this thing off at the state level? All right, too late for the IRS.
Yes, because the state voluntary disclosure programs are amazing. You could apply online, and assuming that the notice hasn't hit your client's mailbox, like as Eric said, you beat them to the punch, the penalties will be abated. And if you're disclosing honestly and truthfully the amount, you can enter into a payment plan. You don't have to write a reasonable cause letter and have that fight about whether you meet the burden to abate the penalty. It's automatic. It's a wonderful way to come forward, get back into compliance, and they save on their tax rep fees too, because Eric and I don't have to start doing fact finding and submitting reasonable cause scenarios. So definitely explore that as an opportunity.
Yeah, no, exactly. Now, I know our time is getting short, but one of the emails that I've gotten, I think 2 or 3 of, and I mentioned this to you last night, is some concern by taxpayers. Oh my God, if the government is standing down, they're deferring, they're reading about the budget deficit, will I be able to get my refund? Will the government even be able to pay people? Noel, I mean, again, we went through some statistics yesterday through the ABA committee. Any reason to be concerned?
No. The government brings in almost $3 trillion per year. And of that amount, their enforcement counts for about like $50 billion of that. So if you file, you're getting your refund. There's no need to panic. Our government is going to pay those refunds. And in fact, that's their number one priority right now, is trying to keep everyone filing, push out the refunds for those who have them, and keep our wheels in the Treasury turning.
Right. No.
But that could come to a halt, Eric. Remember what they told us yesterday.
Well,
so there's a big concern right now.
Wow. I was just about to ask you, are there other reasons to be concerned about the IRS? And this is exactly where you're going, because most folks have never, I've seen a campus. Most folks, because every now and then, because we're involved in the committees at the ABA, they will offer us, if the meeting is near one of these campuses, where we can go and actually see an IRS campus at work. So I've done that. I've actually taken a tour of an IRS campus in New York, Brookhaven. Can you describe it? Here, what I was going to ask you is,
so the IRS
do we have
campus,
a reason to be concerned?
Yes, the IRS campus is like an assembly line at a factory, 3 or 4 football fields long. And these are folks who process the paper. So the paper returns, scanning, processing payments, and suffice it to say, it's close quarters. It's the polar opposite of social distancing. And right now, they're still open. And these folks are at a bare bones crew because they closed a lot of campuses in the years prior to this. So now these people are working under these conditions, and if one gets sick and the pandemic causes the facility to close down, there's going to be a complete halt or there could be major delays in the paper processing because they won't be able to be physically present on this so-called assembly line. And it's a situation now that they're trying to deal with, and they're essentially concerned the most, obviously, for the health and well-being of the IRS employees. They are worried, and it is being monitored, but we were told that it's like one of their top-tier issues right now, the safety of their own people on the campuses.
Yeah, no, and for those of you who aren't aware of this, there used to be a lot of redundancy, meaning there were lots of campuses that did the same thing. So the idea being, if one campus ultimately had to be shut down, because what Noelle and I heard yesterday from the government is, if one of these people were found to be positive for coronavirus, that whole facility has to be shut down and has to be cleaned. That is going to take a number of days up to a week. Meanwhile, because of the shuttering of so many campuses, there's no redundancy. So it's not like the work can just be shifted to another campus. The last thing is, because of the paper, like for instance, the 433s, the 843 abatement requests, things that aren't filed electronically. Nobody working at home can do that. Unfortunately, it has to be done at the campus. There's no other way to do it. So it's not like it's going in electronically and someone else working at home can just review the 433. It doesn't happen. It's got to get into the campus. So in the event, what the weak link here in the chain is, Noelle, one of these people shows up with a cough or a fever, the whole operation comes to a halt.
And that would be crippling to productivity.
Yep, and to the whole tax system. So that right now is really one of the major concerns. And unfortunately, what we were hearing yesterday is there really, other than hope no one gets sick, there really is there's no good game plan to deal with that. That will just back everything up. It'll be like the government shutdown all over again. So listen, and by the way, Noelle was going to say, I'm pretty sure this is all we know right now. This is going to be changing. So even though we normally don't do like weekly updates, we may be doing more weekly updates through the podcast as things change, as Treasury puts out more guidance. Maybe they do extend their tax returns eventually. We don't know, but right now they haven't. As we learn more, we will be putting out more, dropping more of these podcasts to update you. But so
Eric,
with that,
before we check out, I just wanted to mention one more thing that we did not talk about because we don't have time. But the relief, the House Bill 6201 that's at the House right now, which is basically going to codify changes to the FMLA, Family Medical Leave Act, will provide protection to people, those who are sick, and it's going to be changed shortly. We're following that, where employers will be required to pay certain employees for periods of time. Credits to the employers will be issued, refundable tax credits. It's a whole another topic that we could get into when it passes the Senate, if it passes the Senate. But it's out there, and if you wanted to read it, it's HR 6201.
All right. No, thank you very much. And listen, Noelle, thank you for coming on and helping me do this update. If anyone listening wants to get a hold of either me or Noelle, I will put our emails in the description below. You can also go to Green and Sklar's homepage. Noelle and I are both listed there on the professionals. We were partners of the firm. All right. But I will put our emails and the phone number down in the description below. Otherwise, look, everyone stay healthy and safe. Avoid exposing yourself as much as possible to the virus, all right? Social distancing, work at home to the extent you can. Let's all hope that the pandemic ends quickly and with very few people harmed by it. So take care. We, of course, will be doing more podcasts, but if things continue changing, and I'm sure they will, Noelle and or I will be back and we'll be updating, all right? So Noelle, thanks for doing this.
Thank you. Stay safe, stay healthy.
Yep. Everyone, thanks for listening in, and you'll be hearing from us probably next week. Bye-bye.